Welcome to the end of day review for Thursday, the 29th of February 2024. Starting off with the economic calendar, there were two red folder news events for the New York session. The first of which was somewhat neutral, and then the remaining news events, including medium impact events, were negative, supporting the underlying idea for long in GBPUSD. However, having said that, let's move on to the 4-hour chart and unpack, or rather the daily chart, and unpack what had happened. So from a daily perspective, I think what's most important for me in particular is identifying if there's consecutive bullish or bearish candles to suggest why we should trade one direction or the other. In terms of the daily, for the purposes of Thursday, you can see Thursday ended up as a bearish day, which meant that really there wasn't any bias here because Wednesday and Tuesday were bearish, so we didn't have three consecutive bearish closing candles to suggest why long should be favored over the other. In terms of the 4-hour chart, we know that our market structure is confirmed bearish. Last week Friday we did have confirmation that the pullback phase leg was extended. As a result of that, we identified the pullback phase last point of supply, which we reacted to on Wednesday and created this leg with the objective of potentially taking out the substructure high right here and pushing deeper into the pro-trend extreme. However, at the same time, we had to keep in mind the fact that we are indeed actually reacting to this pro-trend extreme, and there's a good likelihood that this pro-trend extreme will actually prevail and will actually move and target the 4H external range liquidity. However, having said all of that, what it essentially meant for our day trading is we could trade both directions, and both were supported by the higher time frame narrative, and then it was just about looking at the 5-minute and understanding how we could navigate the day. So starting off with the London session, I just want to refresh my drawings because there is a loss in here. But essentially, starting off with the London session, we had the Frankfurt low of the day that was validated by London. And then as you can see, we took out the Asia high, we pushed back in, triggered the entry, but then created equal highs. Unfortunately, what then happened is instead of the liquidity being targeted immediately, we actually took a loss right here. I couldn't break even because we didn't actually wick the high. We didn't wick the highest point that triggered the entry in terms of my break even protocol, so that was a loss right there. And then later on in the day during the New York session, actually let's just take a step back. So while the Frankfurt low of the day was validated, the next option was either the London high of the day was going to be validated, or the London low of the day right here was going to be validated. However, what then happened is that New York actually put in a low of the day. So whilst New York validated that the London high of the day may hold, we had red folder news events to support why the New York low of the day was likely to hold rather than the London high of the day. As you can see, I did manage to get into an entry, and the idea behind the entry was the fact that 3:30 news was negative, and that enabled me to suggest why the New York low of the day should hold. And in addition to that, we had weak breaks of the change of character level, which would support the creation of this leg right here. And because of that, I'm happy to use wicks, and thus I considered an entry in and around this 50% level, just because it's what made sense at the time, and it was a question of, do you enter based on a specific POI, or do you enter based on the 50% level with not much difference in perp range? And the key difference here is either you're going to get tagged into one trade, or you're going to get tagged into both trades. However, if your better positioned entry is a loss, it's you're going to end up in a loss position whether you enter right here or right here. The only impact is whether your risk reward makes sense, and from my perspective, with the ultimate objective being this substructure high and day one Asia liquidity from yesterday still being unliquidated, there was sufficient reason to believe that price would actually go up, and a 4 or 5 hour trade was certainly possible. However, what then happened is towards the end of the session, a lot of bearish momentum kicked in. By this point, obviously, I was already break even right here. I had actually moved my stop loss quite close to this low. So what that meant is that I actually made a half an hour profit, even though this trade is technically a break-even trade per my trade plan. So all in all, that's pretty much the end of day review. Just to summarize, in the morning we had Frankfurt low of the day validated, resulting in one loss, and then later in the day we had London high of the day validated by New York. However, the news overrode the fact that this London high of the day will hold, in addition to the fact that the London high of the day being equal highs and a likely target. So as you can see, that's precisely what happened. Unfortunately, the trade it just didn't play out, and we got the daily direction wrong. And as you can see, the intended daily direction was actually too short. So that's pretty much the end of day review.